All right, everyone, welcome back for another episode of This Weekend Charts via Carnivore Trades and Wall Street from Main Street. If you haven't done so already, don't forget to give the video a thumbs up, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and a live day trading. We've got a sale going on also over there, so check that out if you get a second. Anyways, let's get into it here this week. So markets here continuing higher again, and on the NASDAQ, if we take a look at the triple Qs, you're going to see out of the last, we got 14 days, I believe, 3, 6, 9, 12, 14 days here, green on pretty much all of them. And we did get a little bit of a dip Wednesday on the FOMC, but ultimately ended up just being kind of some hedging coming off and so on. And we just popped back up and closed at new all-time highs again on Friday, and it is definitely getting a little frothy out there. And we were looking for, or at least I was looking for, a little bit of a stall out here, and you can see we did. I talked about 6,500 being kind of a little bit of a ceiling here, and you can see it was for several weeks. So we have broken through that recently. And so there's been a little bit early, and I do think we still are going to get this fall dip here. Obviously, been a little bit early on that call so far, and we're definitely seeing a market here that's closer to an emerging market than anything. We'll talk about that in a second. But right now, you're going to see that, yeah, being a little bit early here, I still am looking for something into the end of October, I would think. And a lot of people are talking about, oh, the seasonality of September has failed. Typically, it's actually just starting. Generally speaking, you get that middle of the month pull back into kind of October in September. Again, this is on average. It's not always perfect here, but that's essentially so we just had options X on Friday, which is yesterday, and a lot of notional value, 6.3 trillion in premium expiring. So there's a lot of pending effects that go on into end of quarter and into that quarterly OPEX. And that's kind of where that seasonality dip tends to come from, with all that positive gamma rolling off. But nonetheless, the market has held up very well. And, we're definitely into the, kind of screenshotted gains part of the cycle here. And, just be a little careful. We're definitely seeing euphoria out there. I've been told there isn't euphoria out there, but the proof's in the data here. Put call ratio hitting 0.45. That's the lowest since May. So we definitely are seeing hedges fly off very quickly, and there's really no events to hedge for now. So there's not going to be any more. I mean, we don't really have jobs for a few weeks. I think we have PCE next week. That's not really a big one. So no more kind of short seller fuel from these hedges, and we're coming into an important cycle as well tomorrow, which members are aware of. But nonetheless, this rally has been incredible. And when we were talking about the lows here, I talked about how much because of how much we pulled forward this correction so quickly, the rally would be equally as violent. I didn't think we were going to go this high, but it certainly has been an amazing move. And take a look at the triple Qs here. If we go another, $4 on the triple Qs, so we hit the 600 whole round number on Friday. If we go another $4, that's a 50% move since April. That's emerging market type economy stuff here. And we talked about this at the end of quarter two, and we said, look, Besant, they're going to pump this thing. This is fiscal dominance, is what they're going to do, and they have really not. I mean, they've really made good on that. So we'll see what happens here next week. There's a pretty gigantic call wall on the triple Qs at 600. So that's kind of your next big dealer resistance, and that obviously got touched Friday. And historically as well, these whole round numbers on the Qs going back to the '08 low, '09 low. The tests of these levels, the first tests have, excuse me, this one right here, at $100. 200, each of these first tests of these whole round numbers has brought between a 10 and 40% correction. I don't think we're going to see 40% or anything crazy like that, but If you have gains here, just make sure you're trailing your stops, and don't let those go against you, because when these parabolic moves top out, they go down parabolic. You don't want to let those you don't want to let that hard-earned money go to waste. So, but anyways, markets here again, 600. That's the big level we're watching on the Qs this week for the S&P. There is a little bit more interest at 67 for like the early part of this week, but it's kind of split in hairs at this point. It's not that far away currently. But anyway, amazing rally here. IWM finally hitting new all-time highs. I've been talking about the Russell 2000 being kind of what could pick up in favor of tech, although tech has done fairly well, although it was underperforming for a few weeks, but finally making new all-time highs. It did go essentially right into double top here too. So, I mean, no pullback here. I think it needs to flag or base a little bit before breaking through that. Maybe it can try to push to 250. There's certainly that possibility. And you have a gigantic, I mean, if we go out to the monthly here, this is a big, I want to talk about emerging market stuff. If this ever breaks bull, that's going to be an amazing thing to see. The diamond here, so the Dow, same thing, new all-time highs, new all-time closing high. No real changes. I would say, yeah, right now, short term, 458 would be a level you'd want to hold on any sort of back test. Speaking of the Dow, we'll talk about it obviously later, but the Dow to gold ratio here, you can see it's basically at a trend line going all the way back to the 80s. So essentially back to that gold bull market peak, the euphoria peak in 1980. And it'll be interesting to see, can this have a reaction off of here? My guess is it may, but you do have a lower high going into it now. So the reaction may be lower, and we may see gold at some point outperform and that ratio come down, which can change things very dramatically in the investment landscape. We'll just say that. Anyway, SMH here again, gapping higher. We had some big movers, ASML, Micron. I think Micron has earnings this week too. Nvidia is still a little bit of a laggard, though. It has not made new highs recently. And of course, everybody's favorite, Intel, is being bought by the government, obviously, or partially. And Nvidia committing, I believe, $5 billion in capital, which isn't a lot for them, but it did boost the stock, obviously. I have strong opinions about this. I think the stock was going to $14. They could have gotten it a lot cheaper, and probably could have gotten it for under a $40 billion market cap, honestly. So I don't think it was a great deal for the government, although they love it. They seem to think they're doing great. But anyway, yeah, Intel rallying and still finding some resistance at that big $30 handle there. But that was the big jump there for SMH. IGV, new all-time high, new all-time closing high, very strong. Transports are weak, however. And again, you can continue to see the divergence between the real economy and whatever they can pump on Wall Street, because not everything gets pumped here. But yeah, you can see this trend line here on the transports. It's a big deal. I think that the transports are ready to trend this week. They have done enough basing here to move either up or down. Right now, you do have a red inside bar, and you're below resistance. But who knows in this market? Maybe it goes higher. All right, big story here this week. We got to talk about interest rates. First, actually, yeah, let's just look at So this is the Japanese five-year yield. That just hit a new high, going back to '08. And the Bank of Japan announced they're going to unload, I think, 250 billion in stocks. Now the Nikkei, it dipped a little bit on Friday. It did rebound, and we'll see what happens next week, though. So if that yield continues higher, it's going to present a problem in the Forex market. Speaking of, if there's a catalyst for any sort of a dip here or pullback in the U.S. equities, so the Fed cut. And we actually got to move this. So effective Fed funds is now 4.08. So there we go. But you can see here, the 2-year went up, the 5-year went up, the 10s went up, and the 30s went up. after the Fed cut. So this is what I've been stressing to you, that it's not, this is a new regime. It's not the same 40-year-old bond bull market where the Fed just cuts and everything just works. We have structural fiscal problems that will not go away. And yeah, the Fed cutting into, 3% essentially CPI. Guess what? The bond market doesn't like that, and it's telling you that right now. So just be aware of that moving forward. XHB was down on the week here, so rate cuts not helping there. And then we have IYR, same thing, down on, excuse me, down on the week. XLF was up, and look at this, it closed right on, didn't mean to do that, closed right on the red bar high, exactly to the penny. So you still technically have an inside bar here to that reversal candle. So it'll be interesting to see how that works out next week, but remarkable how that held by the end of the Friday there. We have KRE that backed off on Friday as well, but this pattern here is okay to go higher technically. But I want to see it stay above 64. XBD broker dealers here finished at new highs as well, although not by a ton. Oil came in a little bit this week. We had I think there was some geopolitical news buzzing around this morning, I read, but nonetheless, you do have lower highs here, and I think the expectation is, some type of a slowdown. I do think if we get a good enough sell in oil, you're going to want to buy energy, kind of for like the medium to longer term. But right now we got some lower highs here. We got rejected at 64. Again, if we can break back above it, it can squeeze up. But right now, oil's been in a tight range. We had energy stocks, XLE, kind of a choppy week, but it's held up okay. It's held that little breakout so far. There's XOP and OIH. OIH just can't get through that 260. As soon as that gets through 260, it can rally, but so far just been very weak here. Dollar index, again, Fed cutting, dollar index going up. That tells you there's too many shorts, and it had a nice double bottom there, and we were talking about that earlier this week. We were looking for a sweep of this low and then a rebound, and that's what it got. Gold here. So again, new highs, but after the Fed cut, it did not make a new high. So just be aware. It is really, I'm just going to throw this out there. I did a little video on my blog on this, but gold is really hot right now. Just like in overbought stance here. That doesn't mean it can't go higher, but just be aware of that. And again, we just got the news out of the Fed here, so maybe some digestion is getting close. That said, I wouldn't fade it, and I don't see any technical sell signal here. And gold is not shy when it goes through, when it's ready to consolidate, it tells you. I mean, look at the dramatic candle there with the volume, right? It's pretty obvious when it wants to reverse. So we haven't seen anything like that yet. And GDX, look at that move on Friday. So as long as now maybe it's, I don't know, maybe it's a blow off here this, now we're going to correct here, but as long as the miners are leading, I'm going to give gold the upside bias. Look at that. And finally a monthly breakout. I know everyone's favorite, even Barrick, up 10% on Friday here. So pretty impressive move. But yeah, gold, it's fine. If it breaks back below 35, though, it's in corrective mode. Now I'm just going to look at SIL, because you have a lower high here, and that's silver, obviously, silver miners, and then SILJ, same thing. It's not by an enormous amount, but it is a detail that I pay attention to. Whereas, silver is essentially in a double top. I think silver's, it's going to go higher still, but, just pay attention to these little nuances. Again, like I've said previously, this is in a much healthier place at 43 than it was back here. We were already parabolic for 3, 6, 7 months 8 months before we got to 43 last time. We just broke out here like 4 months ago on silver. So the base is way closer to where price currently is. But anyway, platinum here tightening up. I drew a little wedge there for you. You guys can follow that if you like. We'll see which way that breaks. And then we've got palladium here. A pop back above 1200. Could give it a little bit of a bid in the short term, but outside of that, not much else there. And copper here continues to just be very muted. You know, there's just a lot of damage that was done from that sell-off. Honestly, it is just traded in a range since then. And then lastly, we've got Bitcoin and Ether. Sideways week, a little bit of a dip. So Bitcoin diverging from the stock market too. Sell-off on Friday, whereas markets pumped to new highs. And Bitcoin hasn't not made new highs in like almost 2 months, like a month and a half. And if you just count this as like a double top, you could just say it hasn't made it since July, really. Ether here, same thing, although structurally there's really no problems like on the weekly. And the same thing for Bitcoin too, just for the record. No problems on the weekly structure right now, but it has lagged a little bit here. So right now 4207 on ETH, and Bitcoin, I would just say you're fine. Yeah, as long as it's above 105, we'll just say for now, which is plenty of space. But anyway, markets here, again, incredible rally. We have had a pretty big target here at the 600 handle on the Qs. We'll see if that seasonality does kick in shortly. A lot of people calling for a lot higher here, but again, just be careful. We're starting to see those signs of hedges really coming off here, which does skew the boat here. A lot of investors on one side when there's not hedges in play, and so on and so forth. So just be careful of that. But anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on conovertrades.com. I'll see you guys all next week.